It's becoming harder and harder and harder to track and decide what to do when it comes to investing, because there are so many choices out there, and because of these many choices, it become harder for you as an investor to, especially if you are not too aware of what to do. Fortunately, I make sure to simplify your life, because whenever you have these two questions and these choices, harder choices to make, you can rely on me. Look at the data that I provide, and that will make your decision making very easy. So today I'm going to talk about two Magnificent 7 ETFs. The first Magnificent 7 ETF to come to the market, it was Roundhill Magnificent 7 ETF, which is the ticker symbol right now is MAG or MAGS. If we look at the price range, it came all the way 52-week range is 24 to 36, where it is right now 36.51, right? We can see the chart 5 days. So this is just a chart, and then the other one just came out, which has different structures. I'm going to show you the difference between these two. Will be yieldmax Magnificent 7 option income ETF. So this is purely for income, and if you look at the it literally just came out just last week, so it hasn't been in the market for a long time, and because of that you might be wondering, should you invest in this one or should you invest in that one? So in this video I'm going to make that decision process very easy if you watch this video to the fullest, right? Because I'm going to give you all the details, performance, fees, and all the 4 points that I usually decided on whenever it comes to two funds that you want to invest your money. Because I've already made a full video about this YMAX, but I haven't made any video about Roundhill Magnificent 7. So what I'm going to do, I'm going to give a description, because you need to know what it is, and then once I go through that, then I'm going to show you a comparison chart that I made. So if you stick around, just make sure you subscribe as your first time, so you don't miss this type of comparison and decision making process. And if you like this type of content, just make sure you smash the like button. The first thing we're going to do is to look at the MAGS Magnificent 7 from the company called Roundhill. So MAGS 7 invests in 7 tech stock with Roundhill Magnificent 7 ETF, or the ticker symbol is MAGS. Focus exposure to Magnificent 7 stocks, the leaders shaping the future and driving innovation in the tech sectors. You know those stocks. I'm going to show you which stocks are those Magnificent 7. Of course, if you look at the little chart right here, you can see there's Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia, and there's a Tesla, If we look at the Roundhill overview of Magnificent 7, offers equal weight exposure to Magnificent 7 stocks: Alphabet, Amazon, Apple, of course, Microsoft, Nvidia, Tesla. MAG is the first ever ETF to track the Magnificent 7. So this was the first one came to the market before yieldmax came with YMAG, which came out just last week. So why would you bother to invest in YMAG? So these are the two things where these are the three things you're gonna consider before buying. The reason number one is because MAG offer exposure to a Magnificent 7, so that makes your process easier to have exposure to Magnificent 7, these type of stocks. Efficiency, right, is designed with both investors and trader in mind. So MAG seeks to offer similar tax efficiency and to traditional managed ETF. So there's efficiency there, and the simplicity. So MAG is rebalanced to equal weight on a quarterly basis, ensuring consistent exposure to Magnificent 7 in a single ticker. So for example, if you buy your own and you want to do these ones, of course one stock might outperform the other ones, and the other one will be underperform. So then if you're not, in order for you to stay balanced, you kind of have to rebalance them. That means you have to sell some and you have to buy some. So in order for you not to do that, you can just buy this one. This fund, of course, will do that for you on a fund level. There's a little note here. I just want to make sure you understand, because you might be familiar with another ticker symbol, right? So effective upon the open, of the trading on November 9th, 2023, the fund ticker symbol changed from BIGT, was baked to MAGS. So because I went to another website, actually I found they haven't updated to MAGS. So sometime you might go to another website, you might not find this ticker symbol MAGS, but right now it has changed to that, but before it used to be BIGT. This was the new name, and the full name changed from the Roundhill Big Tech ETF to the Roundhill Magnificent 7 ETF. We look at the fund details. Ticker symbol is Mags. The primary stock exchange is NASDAQ. YieldMax is a New York Stock Exchange, okay, NYC. Expense ratio is 0.29, so it's very low, right? Because this is pretty much index, right? And I'm going to show the comparison between this one and YMAG from YieldMax. We look at the asset management right now is $93 million, and of course was launched in November 4th, 2023. So recently, actually, it hasn't been that long, because November, December, January, February. So it's been only 4 months. It's been out of 4 months, not that long. You can do option on this one if you want to do option. Share outstanding is 2,550,000. Of course, management style is active. So even though there are 5 stocks, they don't really just go with follow index. They just do active. So they can buy some, can sell some, they can change at the time. But there's a note on that at the bottom. I'm going to talk about that when it comes to activity, how they're going to do this, how they manage this ETF. So we look at the exposure. Exposure is, I've mentioned, they're investing those 7 stocks, which is Nvidia and Meta, Amazon, Microsoft, Alphabet, Apple, Tesla. And you can see here they are pretty much equal weight. But right now you can see Nvidia has about 17% because it has outperformed. Nvidia has gone crazy. And then Meta, of course, just recently, yesterday actually went up 20%. So of course he has performed really well. When it comes to Amazon, it's 14, Microsoft is 14, Alphabet is 13. We look at the Apple, and of course Tesla has crashed, and right now it's only 9%. This is what I was talking about. So it's easier because for them they were going to rebalance this. So that means they're going to sell some of Nvidia and then buy Tesla, or what they can do whenever they get new money, they just, instead of buying this Nvidia, they just add all that money to the underperformers. Underperformer in this sense, but it doesn't mean that the ETF themselves. For example, Apple has done really well, but in this sense of ETF of weight, when it comes to equal weight, it has underperformed the others. So we look at the market price. It came 24. Right now is at 36, so the return that will be over 36%. If we look at the since inception, has returned about 35.63%, so about 36%. Distribution, it's 2.71. That's a dividend yield. So because this fund is for growth rather than income, so of course they don't pay as much. They only pay 2.71, and they don't pay monthly as YMAG. They actually pay annually. So every December they're going to pay you. For example, you can see here December 27, that's what they're going to pay next dividend. So that's a long way to come. And the last dividend they paid was about 15 cents, and that they paid on the 29th, December 29th, a couple months ago. So that's all about for this fund. But there are questions here. For example, they ask, why does a roundhill Magnificent 7 ETF invest in total return swaps? So this is something I want to talk about because and I mentioned this on the, when it comes to comparison, I compare between this one and YieldMax YMAG, and I've said the risk. I thought actually this one doesn't have as much risk, but then when I look at this one, so swap ETF, swap structure is a structure that there is agreement between the fund company and the bank, that they do swap. I'm not going to talk about this. If you wanna, you can actually look at swap. This is a structure where you don't directly invest in these ETFs or in these stocks. They don't actually buy their stocks, but they have this agreement with counterparts, which usually is a bank or one of the big banks. So the fund utilize total return swaps in order to maintain compliance with RIC diversification test. The fund intends to qualify as a related investment company for tax purposes. So because of the tax purposes, they do this type of structure, which is called swaps. I've shown you of course the stock chart right here. We can see right now is 36.51, and we can see YieldMax is 20.30. And if we look at this, if we look at the 5 days, look at that. This is roundhill Mags. Do you see this? How it looks exactly on that day? It just jumped right there. Right? Look, this guy here. is pretty much the same. So the performance on those days, the chart looks exactly the same. Right now, let's look at ETF battle scorecard. This is a final say on which ETF should buy, and I always have 5 points. I made a video yesterday to compare YMAG and YMAX. They are both from yieldmax ETFs. One of course is more diversified. The other one is not as diversified, and we know who was the winner. So today I'm going to talk about again this type of comparison, which I usually do. I find fun. I found it a better way to actually determine which ETF is better. So the first thing we're going to look is category, right? We're going to look at the geography, risk, and strategy. They both invest in large stock, because there are 7 stocks, right? So 7 ETF, they're all American companies. So the geography will be US, and they're large companies. We look at the risk and strategy. So the other one, YMAG, YMAG invests in option ETF that don't actually hold the stocks, they do synthetically. And when you look at the MAGs, actually also doesn't do synthetically, but they do swaps. So swaps is pretty much like synthetic. So they are both have that risk strategy on equal ways. So we're going to give those as a draw, right? Because it's not they don't hold the stocks themselves, directly. They do indirectly holding those stocks. So both of them would have the same risk, which is draw. We look at the fees. So fees, of course, MAGs, because it's almost like index in a way, and of course it's not designed to pay dividends, and that's why it does pay. It's only like 0.29 versus this one is 1.29. There's more work to do with this YMAG here, which is from yieldmax. And of course the winner here will be Mags, which is from roundhill, because it has lower fee. When it comes to diversification, they are both 7 stocks. Of course, they're all equal, so we give it a draw. When it comes to performance, if we look at the other one, it was 35.63, and this one here, because we don't have, this has only been for 5 days. What I did yesterday, I did a back test, and I get it 78.30, but that's the whole year, and this is only for within a few months. So on this one, even though there's a different numbers here, because both of them actually we don't know the performance so far, so I'll give it a draw, because they both, if you look at the chart for 5 days, they both does the same thing. But for long term, YMAG would outperform. Mags will outperform YMAGs because of the structure. Because this one calls. Whenever the stock go up, they have to sell those stocks, and that will, of course, will drag the performance of this YMAG. Versus this guy here, it does not give any of the stock back, so you just let it ride, and they'll do well. But here's the thing: the reason why I give a draw is because even though this will be drag when it comes to performance, but we'll look at the yield and distribution. This only pays about 2.71, and this one pays 36, as I've done yesterday to determine how much YMAG pays. And if you look at that, if you take the yield, of course, and you put back to the stock, that mean performance might not be as bad. So that's why I can really give this category here, this scorecard here, just is a draw right now, because we take this yield or money that you're gonna get here if you reinvest, because that's what they do. They do invest every penny, and if you reinvest that penny, the performance might be the same. But so far we don't know. That's why you need to watch, because I'm going to do this battle again in a year time or 6 months, whenever we know we have more data. So who's the winner? Look at the Mags, it's 2.5, and YMAG, which is from yieldmax option strategy ETF, it's 2.5, because you can see here this has only 1 point here winning, and this has 1 point winning, and 3 was a draw. So if we divide 3 by whatever, we get 1.5. So both of them get 2.5 points. So far it's all draw. Who's the winner now? So the winner, I give a draw. They're all the same so far with the data that we have, because we don't have much data, so I can't really do anything else to determine who is the winner. But here was what I can say. If you are an investor who is seeking an income, then of course YMAG pays income right now, and you get your income and you get your growth. But if you're an investor who is looking for just performance and of course total return and tax efficient, Mags will be the best for you. That's all for today. I don't have any things to say, so thank you very much. Thank you very much for watching. And if it's your first time, make sure you subscribe and hit the like button. That's all. Till we meet again next video. Bye bye.